Is it possible for a stock to have too much good news?
Interesting question.
I mean, a massive, history-making cash injection sends the stock soaring to multi-year highs. Is that the perfect setup for a massive fall?
It certainly raises the stakes.
Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Today, we're diving deep into POET Technologies, that's ticker POET. And this is based on our research captured today, October 8th, 2025.
Okay, so let's set the scene a bit. The macro environment. Well, there's some cautious optimism out there.
Right. And specifically for this sector, global semiconductor sales are booming. They're up, 22% year over year?
Yeah, over 20%. That's a pretty strong tailwind for a company like POET.
Yeah,
developing these optoelectronic solutions, especially for AI.
Definitely. But we should also note the U.S. economy is a bit mixed. Strong GDP, sure, but some states showing recession-like signs.
And it's a packed day, too, right? Fed speeches, FOMC minutes later, add a bit of volatility.
Always does. Okay, so the main event for POET, this catalyst, it's huge. They just secured a record-breaking $75 million private placement.
And from a single institutional investor, which is notable, largest in the company's history.
Exactly. And the key is it's earmarked specifically to accelerate their AI connectivity solutions.
So not just general corporate purposes, very targeted.
Right. And this news, well, it immediately sent the stock flying. It hit a 3-year high.
Yeah, a massive reaction. Which brings us to the conflict, or the tricky part, valuation.
How do you value this now?
Well, that's it. This kind of sudden cash infusion, it can make traditional fair value models, well, pretty much useless in the short term.
Right.
And that probably explains why Wall Street coverage is so quiet. We're only seeing 2 analysts covering it.
Both buys, though.
Both buys, yes.
Buy.
But no concrete price targets published yet that reflect this news. It's murky.
So it really leaves you, the listener, wondering, is this an undiscovered gem that's finally getting the fuel it needed?
Or is it more of a speculative surge? Has it gotten ahead of itself before proving it can deploy that cash effectively? Yep. Okay, so that's the fundamental tension. Let's look at sentiment. How are traders positioning?
The sentiment tug of war. It's fascinating here.
The options market seems incredibly bullish. We looked at the put-to-call ratio. It's 0.07.
Yeah, 0.07. That's extremely low. It means, roughly 14 call options, bullish bets for every single put option or bearish bet.
Pretty much euphoric levels.
Yeah.
Seems like options traders think there's way more upside, maybe looking towards that $10 mark.
Seems likely. There's significant interest around the $10 call strike. But
there's always a but.
The other side of the trade. Exactly. The short interest. It's not insignificant. 6.83% of the float is sold short.
Okay, 6.83%. And how long would it take them to cover those positions?
Based on average volume over 5 days. So these aren't just casual shorts. They seem pretty committed.
So you've got this real standoff, the super bullish options crowd versus these dug-in short sellers.
Precisely. If the bulls are right, the shorts could face a painful squeeze. If the shorts are right, they believe this price spike, even with the cash, isn't sustainable.
Okay. Fundamentals are compelling but complex. Sentiment is split.
Yeah.
What about the charts? What's the technical picture telling us? Does it confirm the breakout?
The technicals are actually screaming confirmation right now. We look at our 4 key pillars.
Trend.
Streamingly bullish. Both short-term and long-term trends are pointing strongly upwards.
Oh, yeah.
Massive surge. Huge increase accompanying the price move, which suggests high conviction buying, not just noise.
Okay, momentum.
Accelerating rapidly. The pace of the rise is picking up speed.
And volatility.
It's expanded dramatically, which, often happens during strong breakouts. It confirms the strength of the move.
So all green lights on the technical front.
Almost. There is one flashing yellow light, maybe amber. One of our key momentum indicators is showing an overbought reading.
Ah, okay. So maybe stretched a bit thin in the very short term.
Potentially, yes. It suggests the stock might need to pause or consolidate a bit, maybe pull back slightly before potentially moving higher again. It's a warning sign we have to respect.
Right. Can't ignore that.
So putting it all together, our strategic verdict lands on a cautiously bullish outlook.
Cautiously bullish.
Yeah, the $75 million catalyst is undeniably powerful, and the technical confirmation across trend, volume, momentum, and volatility is strong. But we have to balance that against the stretched momentum, that overbought signal, and that stubborn 6.83% short interest. Those are the risks.
Got it. So for traders watching this right now, what are the key levels? What's the immediate battleground?
Okay. Okay, for the bulls, the key is to hold above the previous day's close. That was $7.88.
So hold $7.88.
Yes, if they can do that, the immediate targets would be the recent high around $9.30, and then that big psychological level, $10.
And the downside. Where does the bullish idea break down?
The critical support level, the invalidation point for this immediate bullish thesis, would be a decisive drop back below the $6.50 support zone.
Below $6.50, things look very different.
Very different. That would suggest the breakout has failed.
Okay, so POE is definitely supercharged right now.
Yep.
Cash, conviction, big technical moves.
But also facing some headwinds and potential overheating.
The focus now is really whether it can maintain this new altitude, this higher price level, or if turbulence forces a cool down.
Yeah, exactly.
And maybe a final thought for you to consider. If this $75 million really does change the game and turns POA into a clearer valuation story down the road, where will those currently quiet Wall Street analysts be forced to set their price targets next quarter? Something to think about.
Definitely something to watch.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.